Hello and welcome to the February 2024 market update. My name is Steve Latham and I'm the Chief Investment Officer for Bernanke Wealth Management. This month we're going to go over consumers' wage growth, specifically through a couple different demographics and how it's changed over the last couple years. It's been a very key component to predicting inflation, and it's going to help us not only determine where we think inflation is going to go, but also where we think the economy is headed, as the consumer represents roughly 70% of economic growth in the United States. So, Bank of America puts out this great report every month called their Consumer Report Card, and we're going to show you a couple different slides from that report. What we have in front of us here shows consumers' growth depending upon wage demographics. So there's a sub $50,000 a year wage category, between $50,000 and $125,000, and then above $125,000 would be categorized as high income earners as far as Bank of America is concerned. And what we see on the left-hand side here is wages moderating from the beginning of January 2023 and then extending over roughly sideways with a little bit of growth throughout the remainder of the year. But specifically what we see is the sub 50,000 a year category is doing a little bit better than the other cohorts. We also see that over here on the right-hand side as well whenever we zoom back to pre-2019, where the lower wage earners made quite a bit more due to some of the stimulus measures in reaction to COVID in 2020, and that came down pretty quickly, but they're actually above their higher earning cohorts. Now, this is important because the lower wage earners tend to put a lot more of their income back into the economy through discretionary purchases and non-discretionary purchases. We can also see this by generation, where you have Gen Z, Millennials, and Gen X doing quite a bit better than their older cohorts in the baby boomers and the traditionalists categories. Now again, they are earning less overall compared to some of the older generations, but we want to see that wage growth continue for the younger generation because that's going to continue to stimulate the economy moving forward. Now, the other interesting piece of this report, they showed how consumer habits are expecting to change throughout 2024 from 2023. And a lot of what we're seeing is consumers focusing on the services side of the picture as opposed to the goods side of the picture. Services has been one of the stickier pieces of inflation over the past couple years, and if we see money coming out of the services sector versus the goods sector, that could help alleviate inflation concerns for 2024. So specifically, we're looking at dining and takeout, social events, travel, streaming services, and rideshare services. These are all components of what we would categorize as services. And these are categories that are deprioritized by consumers that took the survey. Now, if you look at how services spending has increased over time since 2019, we can see that on the right-hand side of the chart as well, where services was about 48% of spending in 2019, fell off a cliff because of COVID, but has significantly accelerated beyond the 2019 levels through 2023. If we see that drop off in 2024, that should help take some pressure off of inflation and potentially help the Fed get comfortable with easing their monetary policy. So we'll leave you with that for this month's market update. If there are any questions on it, please don't hesitate to reach out. Thank you.